Hey everyone, this is Fernando with H&G. Welcome to our podcast. We're going to be talking if you should be buying, waiting, or running away from the market.
In the dawn, sweat and grit till the daylight's gone. Steel and dirt.
Interest rates are high today, and the Fed are keeping their interest rate high because they believe that what's happening with the economy and tariffs are going to have more inflation. So interest rate by being high is not really good for buyers right at this second. So do I think it's going to be better going forward? Yes. I think they're going to fire the guy that's sitting with leaving the interest rates high, and they're going to come down, and we're going to go back to a more normal market. Properties that are going up or down, or single family homes, they're fluctuating the most because they don't have a cap. Opportunities in the market right now, I believe there are on multifamily dwellings and some single family dwellings. As an investor or a contractor, I think people are pushing back from single family dwellings and multifamily right now. Some people are waiting to buy at a better rate, and some other people are just waiting overall to see if they can have better interest rates in other parts. Like on a multifamily dwelling, you have a cap, something that's called a cap, that you know how much you're going to buy because you know how much that property is producing. But in single family dwelling, a lot of people are missing out by waiting to see if they're going to get a better interest rate to buy a property. So I'm going to explain it. If interest rates are lower, home prices are higher. But if interest rates are higher, home prices get lower because there is more demand when interest rates are lower. When interest rates are higher, there's less demand. So, when they equal out, you want to buy when interest rates are high so you can make sure you get a better price on the single family dwelling. And then when they get lower, you can sell at a higher price. So I think that's where the people are missing out right now, waiting for interest rates to drop to be able to make an offer. Buying with less risk is using other people's money. So you either want to do hard money, which for other people is not really, for normal investors that know what they're doing, hard money is okay. I use hard money all the time. For regular people, they look at the interest rate that hard money charges and they see a big deal on it. But if you're getting the property for a low value, and then you're making the value by doing improvements, and then you can refi at a higher price, and then you get 75 of ARV, you'd be okay. So using hard money, private money is where you have less risk. To make smart offers, you have to analyze the market where you're going to be buying the property, how much of a repair the property needs, and be able to negotiate. You make money when you buy, not when you sell. And I'm going to tell you why. When you buy, if you buy low and sell high, that's where you make your money. But if you buy high, did your repairs, and then try to sell higher, you might not make your money. If the market cools down, you should always look for multifamily dwelling because people always need a place to live. So if they're not buying, they're renting. So you want to be in either side of it. So when the market's hot, you want to sell, but you want to keep. So you will have money coming in every month. But if it cools down, you want to be able to buy multifamily dwelling because you're going to have passive income. A true investor, don't wait for the market to be up or down to make their investments. You have to keep investing regardless where the market is. You just have to find the deals that make sense. There are always deals that make sense. And if you find them, you will always invest. So I'm going to tell you right now, market is selling a little slow. Before, let's say 2 years back, when we would put property on the market, we would see, or houses, we would see multiple offers in a week. Whether, it doesn't matter what condition the house was, you would see multiple offers. Right now, if you're over $300,000, you're waiting for that offer to come through. And you don't see as many showings scheduled as prior you saw. But that doesn't mean that you should stop investing. That means that you should look for a better way to invest and keep investing on what you believe. Because once you lose traction, it's very difficult to get it back. Right now, we're making offers every day on multiple properties. Whether we get the property or not is not our problem. Our problem is to keep making offers until we get one. So in 2025, if we should buy, wait, or run away, I think you should buy. Because you always have the option to refi, but you might not have the option to buy at a lower price. So once you buy at a price, that's your price. But let's say you're going to buy a house that's $600,000 and you made an offer for $500,000 and you get accepted, and the property is worth, ARV wise, is worth between $650, maybe $700, but you got accepted at $500,000, but you got at 8, and the rate is at 8%. You can always refi down, but you cannot get a lower price once you bought it. So I think this is the time to buy. Remember, this is Fernando from H&G. Faith over fear. Always keep investing. Keep focused, moving forward. Don't get distracted over everything that's going on. Remember, noise, no good. You want to be all signal. Make sure that you're always signal. Faith over fear.
In the dawn, sweat and grit.